Hey guys, it's your big dreamer and doer G Dinero coming to you today with another TA Tuesday. This time it's Tuesday, October 28th, and we're going to talk about how Bitcoin is starting to creep back up again. So is Solana, so is Tesla with MicroStrategy going sideways. We'll cover those and more. But first, remember, none of this is tax, financial, legal, investment advice. It's your buddy G Dinero helping you increase your financial literacy to help put you and your family on that path to financial freedom. And before we dig in, huge thank yous goes out to Joshua 1984 talking about the best, really the greatest explanations. These are the best. Thanks from Australia on a TA Tuesday that I did last week. Giannis 904 said, discovered you through DCA. Brilliant videos, not missing a video since. Thank you, Giannis. Thank you, Joshua. Reno Man 5573 said that the retire on stretch STRC video that I made for Money Monday a couple of weeks ago, that was the most straightforward and informative video he's seen in a long time. Thank you so much. And finally, on the TA Tuesday that I did last week, Joe Biden's daycare said he feels like he's just hanging out with a buddy on Tuesday, which Joe Biden's daycare is a buddy of mine. Nothing but pure alpha on Tuesday. TA Tuesday, love looking at the charts, helps to take the emotion out and the insight when entering a trade. Really said his confidence is increased by taking the TA course, coaching, and watching the videos. That he's made mistakes, which, by the way, Joe Biden's daycare, we all do. Still made mistakes and have blind spots that he needs to work on, but he's still finding success and progressing. And as always, thank you, Sensei and Grasshopper-san. You're welcome for sure. And we'll go ahead and dig right into the charts. All right, as always, we're going to start out with the Bitcoin TABI model. And as you guys can hear today, I am congested. Holy smokes. I've been dealing with this head cold for over a week now. And the crazy thing is I have my hip replacement surgery on Friday. So I need to kick this thing in the next 3 days. So today's going to be short and sweet as a result. I am going to show one new thing here, and that's the crypto fear and greed index. I've overlaid that here on the chart. And you can see every time we spike up in price, we also get a spike in the fear and greed, right? So here it jumped to 74. Back here it was 74. Back here it was 75 after this huge move up. And on the pullbacks like we had back here in June, it dropped as low as 42 and most recently as low as 21 to 22 on the fear and greed chart. So that's that purplish line with the dots on it that you see going up and down. But notice it moves almost perfectly in sync with the price. This is not surprising that as the price spikes, so does the greed side of the equation. And as the price drops, so does the fear side of the equation. It's almost like they feed off of each other. So it's something interesting that you can keep an eye on. I'm going to go ahead and flick it back off. We are still clearly in the light orange zone, slightly overheated as far as the on-chain metrics are concerned. The Meyer multiple barely above 1. MVRV Z-score barely above 2. And the historical volatility has cratered back down again to, looks like 25, almost back down to 25. So we had some volatility spikes there in Bitcoin, and then it's just kind of gone quiet again, slowly grinding back up. What you'll notice on the daily chart, right here, we've got we'll go ahead and hit the liquidity first. The liquidity hit a peak here just below 100, came back and retested it a couple times, and you'll notice that we are starting to creep back up. I expect to see this go up starting later this week. Why? Because again, we're going to see that the rates are going to get cut. We're going to see QE is going to be turned back on again. And as a result, as the liquidity comes in, we should see the price of risk-on assets start to go up again as well. Where's the price in relation to some of the moving averages? Well, we definitely retested the 200-day moving average here. We spent almost a week at this 200-day moving average and now have climbed back up, and we're finding resistance at the 50 and 100-day moving averages, which are just above the short-term holder cost basis of 113,200. That I updated as of this morning. If you wonder where I get those levels from, I get them from James Check over at Check on Chain. Guy does amazing research with it. So short-term holder cost basis is up at around 113,002, and the true market mean right now is at around $81,600. That's the average price of the coins that are likely to move that are currently on the market, basically. Not the Satoshi coins that have never moved, since the Genesis, not the coins that have been dormant for 10 years, 11 years, 12, 13, 14, 15 years, not the ones that are presumed lost. This is the ones that are presumed to still be in circulation in some way, shape, or form, that the average cost basis on those is around 81,600. That has climbed up pretty dramatically over the last several months, okay? You'll notice that we did tag the bottom of the linear regression channel. We are going back up against this resistance that we're going to see here at 118. So 118 is resistance to the top. 113 is support to the bottom. We're kind of trending sideways in this in a holding pattern right now. What do I expect to see? I do expect us to perhaps retest this 112, 113 level one more time before bouncing and starting to make our way back up to the previous all-time high. At least that's what I expect with Bitcoin. If we come over here to the 4-hour chart, you'll note that we are overheated. We did reach almost 2 standard deviations, 1.69 to be exact, to the upside. RSI did break above 70. It hit 76 almost. And we did have a crossover here on MACD, triggering a sell signal that you see right here, right at that resistance zone, right? So the resistance zone goes from 115 up to 120, peaking around $118,000. So we need to get back up through that immediately, though. There is a short-term sell signal, although the trend has not flipped. You'll note that the trend is still trending upwards, and we're not up even to the upper part of the confluence cloud on the bullish confluence cloud. So still some room to go to the upside. Again, support to the downside is 113, and then below that would be down here at around 109, which is the 200-day moving average, and 110, that's just that juicy, rounded number that these things like to support and resist at. If we go over to the Solana Bitcoin chart, what are we starting to see there? We did spike up, got all the way up here to 21.0021, and then pulled back. Something of note that I'm starting to see perhaps is if we look at a cup and handle, this being the cup right here and this being the handle, we could potentially break out from that pattern, and that pattern would be from this level to wherever the top of the cup is, about right here, 2.1 down to 1.3, so that is 0.0008 in height, roughly 0.0008 in height. So if you add 0.008 to 0.021, you're at basically 0.003. So I could see a breakout up here to 0.003, especially once the ETFs, they're slowly now starting to get approved. As these ETFs get approved and as the demand for Solana goes up, we should see the price of Solana go up relative to Bitcoin, which will cause this to go back up. You will note that we are mean reverted to the downside right now. So if you were thinking of converting Bitcoin over to Solana, this is the time to do it. When we bounced here on the 200-day moving average, it was a perfect retest of the 200-day moving average. And then we bounced back up and are now just trending sideways. I could see this being massive support down here. And again, taking another shot up here at 0.0021 to show you where what you could potentially make, even from the level we're at right now, back up to where we started to run into resistance before. That's a 21.5% move, meaning if you took Bitcoin and moved it into Solana, you should, if that happens, be able to move Solana back into Bitcoin for 21.5% more Bitcoin. Yes, there are tax ramifications of doing so. And no, I am not a tax professional. You need to consult your own tax professional to see if that would be worth your while to grow your Bitcoin stack accordingly. If we come over here to the Solana US dollar pair on the 1-day chart, you'll see that we did bounce perfectly off the 200-day moving average here with Solana as well. We are running along the bottom of this linear regression channel. It's a pretty decent one at 0.085 Pearson coefficient. So it's pretty locked into this pattern basically. And we're ping-ponging back and forth between the support zone, which is down here where the point of control is around 178, and the resistance zone that starts up here at around 205. So really trading sideways at 200, for lack of better terminology, with Solana. Where would we go from here? We'd go back up and retest this resistance starting at 233 or so and extending up here to about 243, 244. After that, I would anticipate a retest of the all-time high, right? So we get up here. There's a little bit of volume here at around 260. So perhaps we would have to break back through the 260 and then we retest the all-time high. Do I anticipate that happening versus pulling back? Yes. On the 4-hour chart, you'll notice that we are mean reverted to the upside on the 4-hour chart. That's not surprising because we did have a powerful move off of 200-day moving average down here around 177, shooting all the way up to about 205 before starting to find resistance. We're finding resistance right now on the 100-day moving average right here. Again, where is support to the downside? If we back this out a little bit and we take a look, the key area of support is right down here, starting at about 185, going down to where the 200-day moving average is. Where are we running into resistance? Right here at the point of control, right? The point of control over the last couple of months is sitting at 204. So not surprising that and the 100-day are acting as resistance. Where would the next resistance be? Up here at 213, that's the 50-day moving average. We'll want to break above that, maybe do a quick retest of it before heading back up here to that 235 to 240 range to the upside. Ethereum on the 4-hour chart, I only do the 4-hour on this one. We are still in a structural uptrend, although we're kind of testing people's patience here. You'll note it's just, I've kind of said every time it tests 5,000 or gets close to 5,000, it sells off. This time it's showing a sell signal and selling off right at the 50 and 100-day moving averages. So I know that people that are Ethereum holders probably don't love me for saying so, but anytime it gets up here near 5,000, to me it's a sell. Maybe not your whole bag, but take some profits, right? Take 20%, 25, 30, 40% of your bag off the table because you've had ample opportunity to turn around and buy it back again. The last thing you want to do is have it fail to break out of 5,000 and end up going into a bear market and you didn't take any profits off the table. So again, maybe I'm a bit conservative on that, but if you're in profit on your Ethereum purchases, maybe a good time to take profit every time you see one of these sell signals and the trend flips, which we had a trend flip here, over here, and it looks to be about to flip right now. On MicroStrategy, gosh, this is the one that everybody loves to complain about. That's fine. I have a long-term vision. My time preference is one of the lowest ones you'll ever meet. If you were to learn about Safety and Amos's time preference, you'll understand what I mean. But on the daily chart, our undiluted MNAV is around 1.14. That's what I've actually calculated it at on my spreadsheet at around 1.16. So I'm kind of in sync with what they're showing here. That is the lowest MNAV that we've seen, guys, in a long, long time. Like, I've got to move this chart back and go all the way back here to February of 2024 to see the MNAV this low. So we've basically given back all of the premium that we generated in the current bull market. Is one way of looking at it, because that was kind of marking the end of the accumulation phase and the start of the really explosive upward movement, excuse me, of the bull market. And so what do you see here? You see us just basically treading water, going sideways on 300. Yeah, 285, 290, sometimes down to 275, 280, and sometimes up as high as 300, 305. But it's just accumulating right here, right at this point of volume that you see sticking out on the VRVP. If we come over here to the 4-hour chart, you'll note that we are still in a structural downtrend that we've been in ever since July 18th. We had a great sell signal back here. Hopefully some people sold some covered calls against it. I'm selling cover calls even where we are right now on any of these little spikes that you see. I mean, they're subtle, but when the price spikes up and gets up to around 305, I'm selling at the money calls. Why? I'm just generating cash. I'm okay if I got called out with my shares. Again, I've had these shares for a long, long time now. So I'm using them to generate a bunch of cash. So then on any pullbacks of any of the other AI related stocks that I'd like to move into, I'm able to move that cash into them. If there are no other opportunities at a time when I generate cash from the sale of cover calls, I'm just buying more STRC, and we'll talk about that when we get to the preferreds. But right now, we're neutral, right? We're at neutral on mean reversion. We're at neutral on RSI. We're at neutral here on MACD. The volatility is just kind of a little bit better than it was before, but it's still relatively unvolatile, if that's a word, sedentary, I guess. And we're still in this area of support. Next area of resistance up is going to be around 325 to 330, right? And that'll start here at this 50-day moving average. Also, you'll note that there's a significant volume cluster right here at around 325 going up to 330, 340. That area, we're not just going to blast right through it. We'll go back up. We'll meet resistance there. It might just be for a single candle like we did back here. Retest it and take off, or it may be for a while like we did back here and trade sideways on 330 to 340. But that's the resistance right now to the upside. We do need to reclaim this 200-day moving average, which is around 345 to 350 with MicroStrategy. What do I anticipate happening? When Bitcoin moves, I believe MicroStrategy will move. I think that Saylor has just used this relatively quiet period to load up using the preferred stocks to get an extra 300, 400, 500 Bitcoin each and every week that adds more sats per share to the balance sheet. In return, though, if the stock price doesn't move, then the problem is that lowers the MNAV. I do see the MNAV getting back up to 1.5 to 2.0 at some point over the next several months. Tesla is finding more strength again. So we did not fill these gaps that I thought would fill. If you look at them here on the daily chart, and especially if I remove that volume from way back, you can see no shares traded hands in these gaps right here. It's highly unusual that something just gaps up and finds a new home for the price. But Tesla's seeming to do so. We're remaining mean reverted to the upside on the daily. RSI has been running hot, staying above 50 the entire time. MACD has been staying in positive territory the entire time. If we dig in to the 4-hour chart, we'll see the same thing. We're at the top of this resistance zone right now, that if we were to break out of that resistance zone, if I pull back and kind of look at over time where we made the all-time high back here in December, there's not a whole lot of volume to work through to the upside. So you can kind of almost think of this VRVP like liquidation levels in a on a crypto chart, right? There's a whole area down here where there's not a lot of volume that transpired, that exchanged hands. And then you've got not a whole lot of volume up here that exchanged hands. So the price could skyrocket up and just keep going up. It could eventually sell off and come back and retest and fill these gaps that happened on the way up. Just like it did. There were gaps that formed. If I go over here, and it's going to be hard to see, but on the climb up, let the VRVP reset, you'll notice there were gaps in here that occurred on the way up on the VRVP, and people at that time swore that was it. Tesla was going to the moon. It was only going to go, up to 500 or higher. And what happened afterwards, it sold off big time and went back through and filled in all of these volumes along the way. Again, if I show you just since this last kind of run up, let the VRVP fill in again right here, these same gaps occurred on the way up. Do they eventually fill back in? Perhaps. My new theory, and we're starting to get back up into mean reverted to the upside territory again, getting close to 2 standard deviations above the norm. My new theory is I think because Tesla is seasonally strong in November, we may see a retest of the all-time high in November before a sell-off occurs in December, maybe going back and filling these gaps. How much of people all want it to be an exact science, and guys, this is no exact science. People want to know what's the percent chance. I'd say I'd leave it at 50-50. 50-50 chance we hit 500 and a 50-50 chance we hit 400 again before the end of the year. Okay, so it's up to you to determine how can I play that. Well, when it's strong right now and it's bouncing off resistance to the upside, wait until it looks like it's bouncing off the upside again here, maybe finding resistance. We get a sell signal, we get a little flip in the trend, and a mean reversion dot greater than 2 standard deviations, and sell some calls there. Maybe take a little bit of profit there. See, people think they need to hold every last share all the way until it hits some magical number, whereas you may find comfort in taking a little bit off the table. When I say a little bit, sell 2% of your holdings. Maybe you have 100 shares, sell 2 of them. It feels good to sell and know that you realize the profit, and then you can hold that money in something else, earning anywhere from 2 or 3% interest up to 8, 10 and a quarter, maybe even 12 and a half. I'll show you how with one of the other preferred stocks. But those are some things to consider when you're using Tesla over here. Nvidia is also tapping against the all-time high again right here, guys, right back up to that 195 level, showing strength again. You notice gap up on the daily chart twice in a row right here. Will those gaps refill? Perhaps not, because we already made one run up, came back down. We're making a second run back up again. Do we take a drop before going up? This one seems to be the most dependent on the U.S.-China trade deals, right? Whenever a trade agreement is reached, supposedly this thing skyrockets. Then the next thing you know, we're slapping tariffs on China again, and this thing drops. But structurally speaking, still in a very strong uptrend. Tapping up against the all-time high again, may make a new all-time high. We'll see. If we move over to the 4-hour chart, on the 4-hour chart, we are mean reverted to the upside. Look how fast things change. Buying opportunities just a week or two ago to selling opportunities right now, where you could potentially sell a covered call, or you could sell off and take some profits. Again, you got to look at this mean reversion. When it's mean reverted more than 1 standard deviation to the downside, to me, that's a buying signal. Even if I don't see buy triangles on the chart, again, if RSI is down near 30, it doesn't always break below 30, but if it gets anywhere down near 30, that's a buy signal. If it gets up above 70, that to me is a sell signal. And we're starting to see another sell signal right here on the chart. Every time we've gone above 70, there's been a drop afterwards. Here it goes above 70, it dropped. It may be short-lived. That's where you can't just sell and pray if you're doing covered calls. You need to sell the covered call on the spike when the IV, the implied volatility, expands, and then immediately buy it back, perhaps a day or two later, for a 30, 40, 50% profit, just like that. That's a different way of using covered calls to try to generate some income. But right now, resistance to the upside is up here at 195, the all-time high, and support to the downside is going to be strong here at 180. That's the point of control where the most shares have exchanged hands over the last several months, is right here at 180, 181. If we were to drop below that, it could go down as low as 177, 178. Either one of those to me are buying opportunities. And again, you've got the resistance to the upside. Palantir was a new one that I did last week. Palantir has made a new all-time high. That was back on yesterday, on Monday. We are now starting to pull back a little bit from that all-time high, looking like this is significant resistance at 190 to 192, 193. Ironic that the price is almost the exact same as Nvidia. Look at the size of this red mean reversion dot, guys. Anytime we get ones that are that mean reverted to the upside, this one in particular is sitting on, looks like 2.25 standard deviations to the upside. likely we're going to see that sell off and pull back to the downside. This is the MicroStrategy Tesla pair. And again, it looked like it bottomed here, here, here. I mean, this sucker is down now at 0.63. It looks like Tesla is still moving stronger than MicroStrategy is. So is it one of those things where you move Tesla into MicroStrategy? Perhaps if you have an abundance of Tesla shares and you have no MicroStrategy and you think Bitcoin's going to run through the end of the year and thus MicroStrategy is going to follow. Again, on the charts, if we look at the individual charts, MicroStrategy has been showing all kinds of buying signals. Tesla's been showing all kinds of sell signals, kind of being to the upside. If we look at the daily, here it is on the daily showing sell signals, but the trend is still up. Here's MicroStrategy on the daily showing all kinds of buying signals, but the trend is still down. So that trend is your friend, quote unquote. And that's why you see this trend still trending down. Where's the bottom? Who knows? It is not an exact science. Pair trading works until all of a sudden it kind of resets. We've got the MicroStrategy IBIT pair here. On the MicroStrategy IBIT pair, we have made a new low, local low. The last time the pair was this low would have been all the way back in September of 2024, meaning that the premium in MicroStrategy is basically gone. That's why it has a 1.14 to 1.16 MNAV or NAV premium. It's basically just barely trading above the value of the Bitcoin on its balance sheet. So when this looks like it has bottomed and is starting to turn to the upside, that would be the time to move IBIT into MicroStrategy. Or when it's below the ARB cloud over here, which we're near the bottom of the ARB cloud, but we're not out the bottom of the ARB cloud. So could it go lower and could there be an even better ARB? Yes. But with this pair, what you're looking for is when IBIT is strong compared to MicroStrategy, you want to slide some IBIT over into MicroStrategy, and or when MicroStrategy is out the bottom of the ARB cloud that you see over here, you would want to go from IBIT into MicroStrategy. When it's out the top of the cloud, which we haven't even been close to the top of the cloud since all the way back at the beginning of the month, that is the time to go from strategy back into IBIT if you're trading this pair. On the rotation model, the last thing it told you to rotate into was MicroStrategy. I told you guys I went ahead and skipped this one only because I'm already so heavy in MicroStrategy already, and I didn't want to sell my PLTR to move it into MicroStrategy. Looks like that was the right call because since then, PLTR has continued to go up and MicroStrategy has continued to trade sideways to down. So again, for me, I don't use the rotation model a ton, but I show people because I started off this experiment a while back, and I show you how I may use it as a guide. So I did buy PLTR here when it told me to, but if it tells me to go into MicroStrategy and I'm already holding a bunch of MicroStrategy, I may not follow its lead over there. Finally, over here on the preferreds, people are a little bit confused on the preferreds, I feel like, and they look at them for trading. STRC is the one that is least for what I would call trading. It's the one that's going to maintain its peg somewhere between 99 and 101. Sure, it might go as low as 97, 98. It might go as high as 102, 103, but it is a variable percentage dividending stock, preferred stock. What that means is they're going to change the actual dividend payout, the percentage, and right now it's at 10.25% per year or 85.4 cents per share per month. And that's based on a par value of 100 of the share price. Well, it's trading slightly below par, so you're getting slightly more than a 10.25. You're getting about a 10.5% interest rate currently on strategy because it's trading below par value. STRD is the one that right now is paying out approximately a 12.5% dividend. How so? Well, because you can buy more shares for every $100. Like $100 doesn't just buy you one share, it buys you more than one share. But the payout, the 10% payout, is at par value or 100%. So you would take the 10%, divide it by the current share price, and it would come out to more like 12.5% dividend on that. Is it risky? Yes, because STRD is the first one they won't pay if they were ever not going to pay a dividend, a preferred stock dividend. Why? Because it's called non-cumulative. The cumulative one that's 10% is STRF. Well, it's been trading at a premium. It's been trading at 110, making its effective yield closer to 9%, right? Because if you're paying $110 for the share, then you're not able to buy as many of those shares as you could as if it was trading at $100 a share or at par value. And then finally you have STRK. STRK is the one that is also going to trade a bit like a stock. Why? Because it has that convertibility of 10 to 1, 10 STRK shares over into one MicroStrategy share. So what's the benefit of that? Well, if MicroStrategy goes on a heater and goes to $2,000 a share, then you can convert 10 of these to one MicroStrategy, effectively making it a $1,000 call option on a MicroStrategy share, and turn around and sell the MicroStrategy share for $2,000, doubling your money. So that's that embedded call option. It's the fact that you can convert STRK from STRK into MicroStrategy at a 10 to 1 ratio. Well, right now you can buy 10 STRK shares for $875. So if MicroStrategy even gets to 1,000, you're already making money on the convertibility of that baked in call option, so to speak. I made a video about it. I'll go ahead and link to it here about the convertibility of STRK. And if anybody wants me to make another one on that, just on STRK and how to play it, I'd be happy to. But guys, for right now, STRC is my money market fund. Whenever I take profits, I'm rolling those profits into STRC. Why am I not rolling them directly into Tesla? Because Tesla's at 460 right now. Why do I want to buy it at 460 if I think there's a chance it's going to pull back to 400? Instead, I'm going to stick my money in STRC, earn 85 cents a share until I believe there's a buying opportunity, then sell the STRC for the whatever I get for it. If it's $97, $98, $99 a share, slide that cash back over into Tesla or Nvidia or whatever I believe is it's pulled back to at the time. Guys, I hope you found value in today's video. I know it's a rough one for me because I feel like poop today. Like I said, I've had this head cold for a while. I've got my hulls right here. I've got water over here. I just need to get well over the next couple of days. You will see that I may be out of commission for a few days after surgery. That's to be expected. If you enjoyed this video, please smash the like button. Make sure you comment below. What'd you like best? What would you like to see more of? And what did you learn today? And make sure you're subscribed to the channel so that you see not only this video, but more videos like it in the future. You can book a course with me. That's available at gdinerocoaching.com. I've seen a lot of people jumping on the options course recently, and there's a lot of people that really want to learn options. Remember, this will give you a great foundational level on the options, everything from the terminology in Greeks all the way up through the buying calls, selling calls, covered calls, selling puts, the wheel strategy, doing synthetic longs, doing bull call spreads, like all of those things are listed in there. It's not designed, the course isn't designed to give you specific financial advice. I will just let you know that up front. I don't give financial advice. It's to teach you how to understand and trade options at the end of the day. Same thing with my TradingView and technical analysis course. You can also join the community. That's going to be launching very soon. I know I've been kind of dangling people along there. I shared this one last week. I still think that's awesome that this guy's ROI has been 6,185% JJ. So congratulations. I'd love to see what it is now because we're another week along since I first put that up there. And guys, remember, I'm G Dinero. I'm here to help you increase your financial literacy, to help put you and your family on that path to financial freedom. Thanks for tuning in, and we'll see you next time. Take care.